16,981. So just completely sold into. The low was was made at 16,850 or so. And from there, the market saw a big bounce, 200-point bounce, then a sell-off, then a rally. And this is, I think, the third or the fourth sell-off that we are seeing. And we still have, 35 minutes to go for close. Rupesh Patel is with us, Senior Fund Manager at Nippon India Mutual Fund. Rupesh, good to have you with us here. Rupesh, of course, runs the Nippon India Growth Fund. Rupesh, tell us a little bit about what you're making of the market conditions right now. Last we spoke to you, you said you were very bullish and very overweight on banks. It shows up in your portfolio as well. That space has also suffered a little bit. Maybe just sentiment-wise, it's taken a bit of a knock. What are you doing right now?
Yeah, thanks. Thank you so much for having me on the show. Yes, your observation is absolutely right that banking is a sector where we had overweight positions and we continue to have overweight position. Now, in the near term, we have seen that on account of whatever is happening to banks in developed world, the news flow has been negative, and we have seen in sympathy, even Indian financial services, so banks and NBFCs are seeing some kind of selling. Our view is that on near-term basis, I mean, India cannot remain isolated when these risks are playing out in the global markets. But if we step back and try to look at it more from a medium to longer term point of view, I think fundamentals for banks, I mean, today, whether you look at it in terms of growth, whether you look at it in terms of their margins or look at it in terms of credit costs, I think we are seeing one of the best fundamentals, time when fundamentals are amongst the best in last few years. And valuations are also, not very expensive considering where markets are and uncertainty is. So I know near term, these uncertainties are there, prices can correct, but we have seen it, multiple times that when such global events happen, first, like there is always correction. But eventually, over medium to longer term, it's the price which you pay that matters. And considering the fundamentals of Indian banks, I think we are still continuing overweight stance on these entities.
Okay, so continuing an overweight stance. Rupesh, hi, good afternoon. I just want to get your thoughts on, the auto space. And it's stemming from an interesting conversation that we had with Maruti this morning. I want to get your thoughts in, because Maruti has actually gone ahead and admitted, we were talking to Mr. Srivastava, that some of this talk about high interest rates, sticky inflation, it's impacting purchasing power. Anyway, cost of ownership is very high for cars. And people are beginning to, hold back a little bit, and they're seeing some slowdown in inquiries and bookings. That really got my attention. Yeah. Do you like autos right now in any case, looking at the scenario, the valuations? What's your stance on the sector?
So in a way, you have answered the question. So we continue to believe that, if you look at the demand outlook, then we were seeing a K-shaped kind of recovery where demand for entry-level vehicles was weak. And the premiumization wherein high-end SUVs, we were seeing strong demand over there. But if we look at on-the-ground feedback, then there is slowdown over there also. So we believe that high interest rates to some extent, is impacting demand over there. We have underweight stance on auto since some time, and we believe the demand outlook is not very encouraging.
Right. Rupesh, you said that you found some interesting opportunities in the power sector the last time you joined us. Just wanted to know where you stand on that. What kind of stocks are we looking at? Are we looking at legacy power generating companies? Are we looking at new age companies? Are we looking at power ancillaries like, the ones that make power meters, etc.?
So if you look at our holdings in power sector, we have exposure to generators. We have exposure to companies which are play on distribution segment, which offers regulated return and visibility of cash flows. We also have exposure to companies which will benefit from potential transition to renewable energy space, which is happening. And at the same time, we have some exposure in the transmission space as well. So across the spectrum, which includes generation, transmission, and distribution, we have companies which will benefit in these segments. and also companies which will benefit on account of their transitioning from being thermal dependent to more renewable energy dependent place.
Anything, have you added in the current correction, Rupesh? And what exactly if you can...
Yeah. So in terms of exposure, we have recently increased our weight in one of the companies, which is a play on distribution as well as transition to renewable energy space. We also have exposure to some power financials where we believe that valuations are very, very attractive at these levels. And I think, I mean, looking at the value of assets, looking at the provisions which they carry, and looking at the outlook on demand.
Power Finance Corporation, Rupesh? That's the name I can
we cannot get into individual names, but I think some of the companies which will benefit on account of such opportunities which come, we have increased our exposure over there.
Okay. Rupesh, just a wider sort of question. Given that the market has, given ample opportunity, I guess, since the start of the year, nothing's running away in a hurry. Where are you putting more money to work? Just, layer out your top sectors or top themes as you look at the next couple of months.
Yeah, that's a great question, because if we look at it from a very near term, then yes, there are uncertainties. The way inflation and interest rates are playing out, definitely world is slowing down and India cannot remain isolated. So in an environment like this, there is risk to earnings and we have to be mindful of that. So if you think very near term, then there are sectors like something in consumer space where you think that valuations are not too aggressively on the higher side, but the risk to earnings is relatively on the lower side. Or maybe pharma as a space where there are again selected opportunities, or in banking where again we believe that risk to earnings is not very high. Those are some of the spaces where we are positioning ourselves to.
Right. You're still not constructive on IT, is it? Because you've been underweight on it, and recently we saw some management changes in one of the top IT companies, management announcement out there, a stock that always, enjoyed relatively comfortable valuations as against others. What are your thoughts? At what point does IT become a value pick for you?
So IT, I think our views are very well known that we have underweight stance, and this stance is there since some time actually. And it has really helped our funds over last 1 year or so in terms of relative outperformance. We believe our thought at that time was that the uptick in demand which we saw in post-COVID environment, this demand is not sustainable. And in a world which is likely to slow down, the risk to demand is very material. And if that plays out, then valuations are on the higher side. As of now, we believe that that risk is very much there. And with the developments happening around banking sector in developed world, there is one more added layer to uncertainty over there. So we believe that valuations, though they have corrected over last 1 year or so, but going ahead, maybe a quarter out, once we get more clarity on what kind of demand outlook is given by these IT services companies, and if valuations also correct, then that could be a point where we would look at, correcting some of the underweights which we have.
All right. We will leave it on that note. Thank you very much, Rupesh, for being with us. We wish you a good rest of the day, and we look forward to our next conversation with you. Okay, we'll take a break on that note. On the other side, we will get you a check on what dealing